Hey everyone, I'm not going to make you wait to reveal the top stock to buy right now in August. For me, it's Alphabet. It's my favorite stock to buy right now, and I'm going to share with you the reasons why that's the case. And I'm also going to address two of the reasons why people are bearish on Alphabet stock. So two of the bear cases, two of the headwinds facing Alphabet, I'll address those as well as addressing the reasons why I like Alphabet as my favorite stock to buy right now in August. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so it all starts with valuation. Alphabet is trading at a forward price to earnings ratio of 19.57 for the GOOGL shares, which is the one I prefer. The difference between these two are voting rights, and for retail investors, the voting rights don't matter because you're not going to own enough shares to have a meaningful impact on the company. So those voting rights are not really meaningful for investors like you and me. And so I always prefer taking the lower priced shares when that's the case, regardless of which one has or does not have the voting rights. Whichever one is trading at the lower price, I take those shares. And the GOOGL shares trading at 19.57, I prefer and I like this valuation. Now, I don't just buy a stock based on valuation, but Alphabet is a stock I've been following for several years now, and it's an excellent company. And when I see an excellent company trading at a relatively cheap valuation, that's what really makes it attractive for me. Now, Alphabet over the last 10 years has boosted its revenue and its operating profit margin in that time. Revenue has exploded from less than $100 billion in a trailing 12-month period in 2015, all the way up to $328 billion in the most recently updated trailing 12-month period. In that time, while its revenues have grown, so has its operating profitability, jumping to 29.83%, up from a little over 24% in 2015. Alphabet has become more serious about controlling costs in recent years, and that's what's made it a little more attractive for me. I felt over the past decade, Alphabet was not so serious about controlling costs, but in the last 2 years or so, it has taken a more serious approach to controlling costs. Now that it saw its revenue growth rate stall a little bit in late 2022 and early 2023, that was the impetus to get the company to focus on controlling costs. And now its revenue growth is accelerating again. And given those cost measures it implemented, that's creating a wider gap in growth and operating profit margin, which is great news for Alphabet stock investors. Now, in its most recent quarter, Alphabet highlighted that they are investing to support their highest growth opportunities, but they remain committed to creating investment capacity with their ongoing work to durably re-engineer our cost base. Again, reminding investors that they're going to keep costs top of mind. They're not just going to invest in growth with reckless abandon. They're going to invest in their highest growth opportunities, which right now is artificial intelligence, but they're not going to recklessly invest in growth. And I like to hear that. I like that they're going to be prudent with their growth opportunities. Now, revenue growth, I mentioned, is accelerating again. You can see 14% revenue growth in the latest quarter, which ended June 30th. That comes on top of 7% growth in the same quarter last year. So they're going from 7% growth to 14% growth, which is an acceleration on the top line. And that growth is coming with higher margins. As I highlighted earlier, the operating profit margin in the latest quarter was 32%, up from 29% in the same quarter the prior year. Now, one of the main arguments against investing in Alphabet stock is the company's investing aggressively in expansion of its artificial intelligence capabilities, and those large investments could not be beneficial for shareholders, meaning that these tens of billions of dollars that Alphabet is investing might not bring back the return on investment that shareholders are requiring. However, to make the argument against that headwind, I would point to Alphabet's return on invested capital over the last decade. You'll notice here that this metric has been rising at 29.68% most recently. And what this measures is how much profit the company generates from capital that it invests. So it measures how good Alphabet is at taking capital, taking money, investing it in the business, and then those investments, what kind of profits do they generate? And over the last decade, you can see them getting better and better and better at this task, which is the most fundamental task a business has, is to take capital, invest it in products and services that generate profits for shareholders. That's the most fundamental purpose of a business. And Alphabet has done a great job at this. And I point to this in relation to the investments in AI to share with investors that they're good at this. They know what they're doing with capital. They've demonstrated to you, the shareholder, over 2 decades now, that they can take money, invest it in products and services that generate lucrative profits for shareholders. And so it would be reasonable to give them some rope here to say that, look, they're investing tens of billions of dollars in AI. Clearly, management sees a lucrative opportunity. Otherwise, they wouldn't be investing unless they saw this as a lucrative opportunity. They're not investing in this category to just say that, look, we're investing in artificial intelligence. That's not the case here with Alphabet. Now, it might be the case with some other companies that just try to use artificial intelligence as a reason to hype up the stock price. I won't mention too many names here. Tesla comes to top of mind here, where the CEO Elon Musk is touting about their AI investments to try and get a higher valuation on the stock. That's not really the case here with Alphabet. They're demonstrating tangible results from their AI investments, and they're selling their AI capabilities to their enterprise partners through their cloud business. Also, they're implementing the artificial intelligence capabilities into their existing businesses. For instance, they've launched the AI overview in Google Search, which uses artificial intelligence to provide an overview from search queries that customers are already demonstrating a liking to. So they've demonstrated progress on AI in developing products and services that customers are already using. But I think longer term, investors can reasonably expect even more coming from Alphabet in those regards. The second headwind against Alphabet, the second reason why investors are cautious against Alphabet, is because of the potential for it to lose market share in its search engine business as a result of some of these large language model companies like OpenAI coming up with search engines of their own. Now, that's a valid point, and I do agree that they will lose some market share to some other companies that are implementing enhanced search engines. So I think that's inevitable. Alphabet, for decades now, has boasted a very strong, a very dominant market share in the search engine business, above 80% market share in the search engine business. And so that's a dominant share in a business that's very profitable. Operating profit margins in Google are over 40%. And so that's bound to attract competition. Now, it's too early to get pessimistic on Alphabet's search engine business just because some of these companies have made announcements, right? It takes more than that. I want to see how they enter the market. I want to see, do they come in the market with products and services that are going to be hurtful to Alphabet? Or are they coming into the market with products and services that might highlight the need for search engine business, that might increase engagement from consumers and grow the market overall, rather than just taking share from Alphabet in a zero-sum game? So I'm not as concerned about the losses in market share in Google Search as most of the market seems to be, given Alphabet's valuation discount at its current prices. Now, year to date, Alphabet has outperformed the S&P 500, and I've had Alphabet rated as my top stock to buy all year. So that recommendation or that stock pick has outperformed the S&P 500 index by 50%, delivering 21.67% return year to date, compared to 14.67% return if you invested in the S&P 500 index. Now, I don't want you to buy Alphabet stocks just based off of my rating. I want you to do your own due diligence. This is just for entertainment purposes and informational purposes only. Please do your own due diligence, watch a lot more videos, do a lot more research before you consider adding Alphabet stock to your portfolio. As a disclosure, I do own Alphabet stock as well. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.